Hello Forex traders, you're welcome back. This is Francis from Charis Trading Institute. You're welcome back to this channel once again. Today I want to show you my trade commentary on how I caught about 70 pips on GBP USD this afternoon. Okay, so we quickly began analyzing the dollar because the dollar literally affects every asset class, right? So this was my dollar analysis this morning. I just went to the daily time frame to see what the dollar had done previously. So yesterday the dollar traded into buy side liquidity as outlined here on this very candle. The dollar traded into that buy side liquidity, and this morning I saw the dollar resting on a bullish order block of the daily time frame. So I knew that the dollar should show some level of rejection and should trade into the buy side liquidity residing above yesterday's high, okay, or the dollar should also push into 50% of this bearish order block, which is called the bearish order block mean threshold, or as well the dollar can trade into the previous 20-day high, okay, because there is a pool of buy side liquidity residing above that high. So this was my analysis this morning. So let's quickly go to the 1 hour time frame as I show you what I saw on the 1 hour time frame. So this was my 1 hour time frame. This is literally how I do my top-down analysis, weekly, daily, and 1 hour time frame, and I look for entries on the 15 or 5 minutes time frame because I am a day trader. Okay, so this was the 1 hour time frame, and this is that daily bullish order block, but in between this I saw a volume imbalance, and for me that was a point of interest. So if you quickly zoom in, you would see that this was a volume imbalance. Remember that a volume imbalance is where you see a price action that involves just the candle wicks without the bodies being involved. This type of inefficiency is called the volume imbalance. You can see it's just the candle wicks in between. So I outlined this, and price traded into that volume imbalance, and again price had traded below the Asian low around 9 a.m. GMT +1. Price raided the Asia low, and remember, according to ICT, we buy below Asia, we sell above Asia, right? So this is below Asia. I was looking to take a buy confirmatory trade on the GBP USD. So that means I should be selling foreign currencies, whether GBP USD, Euro USD, NZD USD, AUD, whichever one you prefer. I prefer GBP USD. In the last 2 years, I've been trading just the British pound, and this has made me become very profitable. Okay, so this was the GBP USD chart. So as well, let's also go to the weekly time frame. On the weekly time frame, we were bearish, okay, and we are looking to see price trade into this sell side liquidity, this old low, which is also sell side liquidity residing below it, and we still have a fair value gap residing here. Then let's go down to the daily time frame. The daily time frame here also, I saw that GBP USD was rejecting off a bearish order block. You can see that, right? This was a bearish order block. This, all of this buy side or buy candles that was raided through by this bearish candle, this is the bearish order block on the daily time frame. So as at this morning, price was on that bearish order block. So I was expecting to sell GBP USD into yesterday's low, and the previous sell side liquidity has already outlined here. Then I went down to the 1 hour time frame for further refinement. So this was the 1 hour time frame, and this was what I saw. I saw a support turn resistance. This is a fair value gap that was violated here. When price returns to it, it will now serve as resistance. Okay, you can see this fair value gap on the left side that was violated here. When price returns to it, it will serve as resistance. So immediately I saw that, I knew that we should be selling GBP USD, okay, and price as well traded above the Asia low at around that 9 a.m. price went above Asia, and I was looking to sell. Let me show you how I took the trade. I simply went to the 5 minutes time frame to identify a displacement in the opposite direction, and I was looking to enter at an internal range liquidity. Okay, so for me today, I took an early entry here. Why? Because this was where I took the entry when I saw this displacement to the downside, creating a fair value gap and a bearish order block, then I took an early sell entry here. Price lingered for quite some time, which is time distortion, but eventually created a smart money divergence here, which confirmed that this trade was going to go to the downside, and I held to it. Look at how I was able to catch about 70 pips at the sell side liquidity of yesterday's old low, right? So this was what happened. Price traded into that bearish order block and lingered for some time. Eventually smart money divergence happened where the GBP/USD formed the higher high, and I don't see the dollar forming a lower low. Immediately I saw that, I knew that this was going to go down. So you can see that, right, at around this time price could not form a lower low, but at the same time price formed the higher high here, 11:10. If you can see my time here on the trading view, this was 11:10 a.m. this was 11 also 10 a.m. we do not see the dollar forming lower low, but we see GBP/USD forming higher high. So what was the re-entry? Just look for a break of structure and return to order block that has a fair value gap or a fair value gap in the premium of that range and sell. So you can see, if you pay attention here, you would see that there was a displacement to the opposite direction here. Price displaced to the downside, breaking this structure or shifting market structure, and you can see this fair value gap. This could have been a re-entry, but because I already took an early entry here, I didn't bother to take a re-entry, and this was how I bagged 70 pips on this trade. Guys, if you like this video, I would like you to like my channel, Charis Trading Institute. I would like you to subscribe to this channel, and until next time, I wish you good luck, good trading.